Welcome back. Let's get another corporate conversation going. JK Paper is in focus today. Now, Nuvama, in a recent note, said that paper stocks are a tactical buy. This is on the back of a number of tailwinds. One, the rapid decline in pulp prices. Two, the ban on single-use plastics. In fact, the brokerage is particularly bullish on JK Paper, given its pan-India presence and healthy return ratios. To discuss the opportunities, we're now joined by AS Mehta, President and Director at JK Paper, on the show. Mr. Mehta, revenues for you get impacted by what happens with respect to office demand, school demand, the festive season, packaging demand from FMCG. So before we get the conversation started, could you quickly give us a breakup of your revenue contribution? How much is linked to schools and colleges? How much from offices? How much from enterprises related to FMCG?
I would say that close to 40% is the office paper. Okay. And also that paper goes in the colleges and the schools as well, but close to 40% is the office paper. And close to 20% is, we call the writing and printing paper. So that's close to 60%. And 40% is our packaging paper, which is also replacing plastic. Also, it goes for the packaging for the pharma sector, for the FMCG sector, and the other sectors.
Okay, got that. Now you want to quickly run us through the outlook for each of these segments in terms of office demand. Has it picked up or has it narrowed? Because now for the last many months, everyone's back to office. So there doesn't appear to be that incremental, boost from people returning, trickling back to office. Secondly, on schools and colleges, there is the new education policy. How do you think it will impact you? And of course, on the third leg of your business, the third driver, packaging for FMCG and pharma companies, how do you expect the festive season to play out?
So I'll deal with all the three categories in sequence. See, the office paper demand has been good. I must say that after the COVID and the normal situation now, so it has already reached pre-COVID level last fiscal year. And thereafter, I would say that this segment is seeing a good growth. So I would say that it should grow by 6 to 8%. And this particular segment is very critical for us because our 40% revenue comes from this segment and we are the market leader. So that's very critical. So it is a very healthy demand growth, I would say, in this segment. The next segment is the writing and printing. So there is an impact of the new education policy. So the sentiments are good in favor of the strong demand. But at the same time, let's understand that the full implementation of the education policy is not that simple, and it will take its own time. Our gut feel is that the books and the materials up to the class of 6th or maybe up to 8th, implemented this year, so before March. And maybe the next fiscal year for the other classes. So the demand is good. There is a healthy demand of writing and printing paper as well. So that segment, I would certainly say that it should grow at something around 8 to 10%. And the packaging board, I would say that there was some lullness in the packaging paper. See, what happens is that the replacing plastic, sudden there is some surge in demand. But again, when the enforcement is not that strict, the people take it lightly. So we have seen in last 2-3 months, there is some slowness in the growth, I would say. And also the pharmaceutical industry, I would say, and FMCG last 3-4 months have not been great. But now the festive season, and also now it's a good season for the pharma industry. And also, I would say that the other sectors should also do well. So we hope that the packaging paper will also see a good demand growth.
Okay, so could you give us some kind of number here for for the other segment? You did say for the education related part we could see around 8%. What can we see for the packaging board?
So packaging board, I would say that it should grow at 8 to 10%.
Okay, 8 to 10% here as well. Mr. Mehta, if I can just ask you about your margins as well, because we have seen pulp prices come down very substantially. I think in FY23 it was at around 820 rupees, $820 per ton, and that has now come down to around 535. What can this mean for your margins?
The pulp prices, if they're higher, in fact, for the integrated players like us, I mean, it is good, I would say, one way, because we produce our own pulp. And when the pulp price is higher in the global market, the global paper prices also remain higher. So the lower pulp prices is not a great help to us. Only thing is that if we buy pulp from the overseas sources, it will have some impact on our cost part. But I don't see any major impact of the pulp prices. But at the same time, the higher wood prices, which is our basic raw material in the country, so that has impacted the margin for the paper sector, and also the lower paper prices. When the pulp prices are globally lower, the global paper prices are also lower, and that will also have bearing on the domestic paper prices. So in fact, there have been drop in paper prices in last 6 months, a certain category in a different percentages.
How much has it come off the highs, Mr. Mehta, just the paper prices?
See, let's say like the coated paper, which is almost close to 50% is the imported in the country, the prices have been lower by almost 20%. And the packaging board, I would say it was down by something around 10 to 15%. Writing printing paper also, the prices were down by 10 to 12%. Office paper, certainly the prices were not too low. I mean, there was some drop by 3-4%. That's fine. But these paper prices coming lower, so that has also impacted the margin. But now I would say that when the demand is robust, we will have opportunity to correct the prices.
So you are looking at a price increase?
Yes, the packaging board particularly, and also the writing printing, there should be some price increase in time to come.
By when and how much?
See, as I said, that once we see a good demand and good traction in the market, we'll take the call.
Mr. Mehta, more questions but out of time. Thank you very much for joining in and explaining the dynamics of the industry in your company. Get into a break. We'll come back and focus on the market.